Okay, let's study manufacturing accounts. They're just like any other business, all right? But there are some additional things. So I don't know where to start. Okay, let's start from the basics, right? So basically, we have one additional account in manufacturing accounts. That's your manufacturing account, obviously. There's one additional account in addition to your additional financial statement, in addition to your income statements and balance sheet. We have manufacturing account, manufacturing account. Okay, so in this we have a manufacturing account, and then we prepare. First, we prepare a manufacturing account. Then we prepare income statements, income statement, and we prepare balance sheet. Now, obviously, a manufacturing business is the one who manufactures. Of course, that makes sense, right? So a business that sells its own manufactured goods. They don't buy the goods from any other business for resale. They make their own goods and then they further sell it. All right. Now, these are the financial statements they make. All right. So that's the first part. Next, we have different types of inventories. Okay. Inventories, we have three types of inventories in this case. We have inventory for raw materials. Okay. What are the raw materials? The material which we use to produce our goods and services. Not services, of course, we're manufacturing something. So goods. So raw materials are the raw materials, obviously, the you can say, the natural products. So let's say wood, for example, if that's used in our production process. So raw materials. Okay. Um, then we have raw materials, and then we have finished goods. Okay. So we might have inventory of raw materials. Okay, so you of course you will have in your factory, you will have some raw materials laying around that will be used to produce finished goods, right? And then when you finish the goods, you don't directly sell them away, right? You don't just supply them to your customers right away. Sometimes they will be staying in your warehouse. So that's finished goods, right? You finish the goods, now they are sitting somewhere, waiting to be delivered. So this is another type of inventory we might have. And then thirdly, we have work in progress. Work in progress. So this might be a new term to you. These are quite simple to understand, and this is also not too difficult. So work in progress means the work which is incomplete by the end of the year. So let's say last year you were making some chairs, and then the year ended, and the chairs, half chairs are complete and half are incomplete, right? So there's a batch, let's say a batch of 100. That batch is incomplete. Okay, so that is work in progress. It's staying in the production line. Okay, you have some chairs going around the production line, and then the production line is stopped here. It's stopped. It's 12 o'clock. You're closing down the factory for the day, and your year is ended. So you will have some work in progress, right? It's going on. It's not finished. Okay, it's not finished goods, and it's not even raw material. It's somewhere in between. So that's work in progress. So by the end of the year, you might have some incomplete work. Okay, so you will have an accurate definition in your book, but basically the idea is that it is the work which is incomplete by the end of the year. Neither it's finished nor it's raw material. It's neither raw nor finished, right? So let's say if it's production of cheese, it's half processed. It's not packed, but it's they're grinding, not grinding it. They're doing so. There are multiple processes going on, right? So it's in one of its process. So it's not complete, right? Now, okay, raw material, the inventory of raw material and work in progress is entered in your manufacturing account. Okay, so inventory of raw material and work in progress is entered in your manufacturing account since it's related to the manufacturing of goods, right? Okay, it is linked with manufacturing of your goods, right? Does it make sense? Since you have raw materials, it has something to do with manufacturing account, right? And then finished goods, of course, they have to do with manufacturing, but once the goods are manufactured, then we have finished goods. So look, we calculate the production cost in our manufacturing account, right? So basically, you have to understand that raw materials and work in progress have to do with manufacturing account. And finished goods, the inventory of finished goods is entered. It has something to do, like it occurs in your income statement. Just like we had opening inventory plus purchases minus closing inventory in normal accounts, in manufacturing accounts, we have opening inventory of finished goods, right? So the goods which are already finished, okay? And then production cost minus closing inventory. So we'll come to that when we'll discuss about the formats. And all these three of them, okay, all of them appear in your balance sheet. So in your current assets, okay, in your balance sheet, in your current assets, you have three inventories, not just the closing inventory, the normal one. Okay, usually in the business you have inventory, right? Do you remember? You have current assets, and then under current assets you write inventory, you write bank. But in this case, you will have inventory of raw materials, inventory of finished goods, inventory of work in progress. So we have three different kinds of inventories. Okay. All right. Next, I hope you understood up till here. All right. And the lines which I read, they will become more clear to you when we discuss about the formats. Okay. And I hope you're not missing anything within here. Within these, within whatever I explained so far. Okay. Now, this is something new for you. Manufacturing account. Rest remains the same. Manufacturing account. In manufacturing account, you have two types of costs: direct cost and indirect costs. Okay. The total of direct costs, okay, the total of direct costs, no, I'll come to this actually. So we have direct costs and indirect costs. Okay. Within direct costs, we have the cost of raw material. You can say it is the direct material. I forgot to explain what do they actually mean. So direct costs are the costs that can be linked directly to the production of a unit. Okay. So basically, you can say they're a bit of like variable costs are kind of direct costs because we can link that to your manufacturing. So let's say I'm producing 10 units. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm producing 10 units. Now the direct material used in this. So let's say I use 10 pieces of wood. So that's a direct material, right? That's a direct cost. One piece of wood can be allocated to one unit of my production, right? So that's my direct cost, which can be directly linked with the production of each unit. That's very easy to link with the production of each unit. So that's direct material, or the raw materials. And then we have basically raw material consumed in my production. And then we have direct labor. Now let's say I was paying for producing 1 unit, I was paying $2. It's very easy to allocate direct labor, right? So $2 of labor per unit. Very easy to allocate, very easy to link with each unit I produced, right? So if my labor is directly linked with the production, with the production, okay? And then we have direct expenses, okay? Direct material, direct labor, direct expenses. Direct expenses usually include royalties. Royalties means, for producing each unit, remember each unit. So direct cost means which can be linked with each unit. For producing each unit, you might have to pay some amount of money to the inventor, some amount of royalty. Royalty means, let's say I'm making a laptop, not a laptop now. Let's say there's one particular type of headphones which are patented, which which are copyrighted by Apple. Okay, Apple has the copyright to that. They invented it. So legally, they are the owner of the technology. If I want to use the technology, they will charge me for each unit I produce. They will charge me. So that will be my direct expense, the money that goes in royalties. Then indirect costs. Indirect indirect costs cannot be directly linked with my units produced. Okay, so you can say they're kind of like fixed costs. You can say that. So let's say supervisor salary. Okay, supervisor salary. Now supervisor just looks around the factory floor. Okay, he's not directly involved in the production. He's not producing it, or his salary is not linked directly with each of my units produced. Right? Each one of the unit produced doesn't have link with the supervisor. Direct labor has it. The ones which are producing, the ones which are packing, the one which I'm paying per piece, the labor, the direct labor. So the supervisor is not now, and rent cannot be linked directly with each unit, right? And there are some other examples. Let me think about some of them. Mm, okay, electricity you can say, I guess. Yeah, electricity, factory power. The power used, the electricity used in depreciation. Okay, and cleaners, the workers which clean the factory floor. Okay, cleaners, and then depreciation of machinery. All these come in under indirect cost, depreciation of machinery. All these are my indirect costs. So within manufacturing account, we have direct costs. Now the total of direct costs makes up my prime cost. It's called prime cost, nothing else. That's it. It's not a new concept, just the combination of these is called prime cost. All these things will be revised further when we move on to your formats of these. So okay, and when we add these both, we have something called manufacturing cost, or cost of production, or cost of goods produced. So cost of production. That's the summary of your manufacturing account. And then the cost of production is transferred to your income statement. The trade, you remember you have two parts in income statement. One part calculates gross profit, which is called trading account, and the second part calculates your um, net profit, which is your profit or loss account. Okay. So this cost of production is transferred to your, because we're not purchasing, right? We are selling from our production cost, right? That comes in our income statement. I guess we are done with the basics, the overview. You might be a bit confused with the overall the thing, but now I hope it will become clearer when we look at the formats. Okay, so manufacturing account for the year ended. So this is how a manufacturing account looks like. Stock of, right? Just like I said, we have three kinds of inventories, right? There is inventory of raw material, right? Um, Look at this part, inventory of raw material, and we have inventory of work in progress, right? As I said, these both appear in your manufacturing account, and then we have inventory of finished goods, right? And this comes in your trading account, basically within your income statement. Trading account means the first part of your income statement where you calculate your gross profit, right? So finished goods come in your income. They replace the opening inventory, closing inventory in the normal accounts. Okay. Now this is the format. Opening inventory of raw materials. Okay. In manufacturing account, you look at opening inventory of raw materials. You add. This is a general format. You have to learn this. Opening inventory of raw material. Um, Add purchases of raw material, not the other purchases, not for the goods of resale. The purchases of raw material, carriage inward, which are linked with the purchasing of that, less closing inventory of raw material. Okay, because we didn't use it, so we'll minus that. Next, we found cost of raw materials consumed. So this is our cost of raw materials consumed. Okay. Okay, so we consume this much raw material. This is also known as direct material. Okay, direct material consumed. Next, we have direct wages, which are 39,000 something, and then we have direct expenses. When we combine these three, what do we get? When you combine these three, we get our prime cost, right? So that's why they have written prime cost, and it's important to put the heading of, it's very important to write prime cost. You must write this. If you don't, you might lose a mark, and they might even ask you the definition of prime cost. So the prime cost consists of direct materials, direct wages. So it's all the direct costs of production. As I said earlier, next we have indirect manufacturing cost. We have fuel and power. These can be linked with the manufacturing, but these can't be directly linked with each unit produced. So indirect wages, fuel and power, lubricants, rent, depreciation, internal transport, insurance. Remember, insurance that is related to your manufacturing. That is related to your machinery. Insurance that is related to your machinery. Everything related to manufacturing. Okay, only that will appear in your manufacturing account. You can say of machinery, inventory, sorry, insurance of machinery or factory, and general factory expenses. So these are the general expenses like tea and coffee and stationery expenses in the factory, the basic expenses of the factory. Now remember this, we add the opening inventory of work in progress, okay, and we less or we subtract the closing inventory. Okay, in other types of inventory, we add the opening inventory and deduct the closing inventory. But in this case, wait, this could be a mistake potentially. Opening inventory. Mm, oh no, it's okay. I think. Yeah, yeah, it's alright. I got confused with something else. Yeah. So we add the opening work in progress, right? Why do we add it? Because previously that work was stopped. We completed this work in this period. Okay. And by the end of the year, there was some work which was incomplete. We should remove that one also. Okay. So the work which was incomplete, remove that. And finally, we have production cost of goods completed. And remember, you have to add these, right? You have to add the direct. So we have the direct costs. Add that with indirect costs. We reach here. Don't subtract them. Okay, you have to add them and then adjust for the work in progress. So first, what do we do? First, we do the direct costs. Oh. In manufacturing account, we do the direct costs plus indirect costs, and then we find the answer, and then we adjust for work in progress. Everything will be given in the question. And finally, we find the production of goods complete, production cost of goods complete. This will be transferred to your income statement. Okay. So there's an example of this. Production cost of the for the period. There's a manufacturing account, the simplified or summarized manufacturing account. Details are not given. So we have direct materials, raw material part, the direct labor, direct expenses. We find prime cost. Remember, it's important to write the prime cost. So basically, we add these three with each other and then we find our prime cost. We find the prime cost, okay? Then we add indirect cost to that prime cost. Prime cost is basically the direct costs. Direct cost plus indirect cost, we find the production cost of goods completed, which will be transferred to our trading account or the income statement. So this is our answer. This is a answer for manufacturing account. And then this will be transferred to your income statement. How will it be transferred? So we will write sales, just like any other business, we write sales minus cost of sales, right? So you'll write minus production cost of, or you can just write minus cost of sales. Instead of writing this, you can write minus cost of sales or less cost of sales. We write opening inventory of finished goods. Just like the normal business, we have opening inventory of, we just have opening inventory, not nothing else. We just have opening inventory, but in this case, we have opening inventory of finished goods at production cost of goods completed. Where does this amount come from? This amount comes from your manufacturing account, less closing stock of finished goods. Okay, we find the gross profit and then continue normally. All right, telephone expenses, all the office expenses, and other things should be included in your income statement. So this is half of your income statement. The other part is not necessary to include since you already know that. And this is how your balance sheet will show the three inventories. Remember, we have three types of inventories. That's why we have three inventories in your uh, balance sheet. This is an extract of balance sheet. Okay, this is extracted from your balance sheet. Now you should have a look at the book and learn the format properly, and then go ahead and give a try. Try practicing a question. Give it a try. Okay. All right. Good luck.